What is the best tax strategy to carry out international operations of an LLC located in the USA?
What I've seen from many clients is that there is, in the United States, there is, for example, there is states like Delaware, Nevada, Wyoming that do not charge income tax to companies. But that only works, for example, when the business is not located or there's no sources of income that are within the USA. So there is one company that comes to Delaware and opens an LLC, but the business of the company is not in the US, but it's international. If the owner of the company is one single individual and that individual is foreign, there is no tax due because the company, the sources of the income is foreign. And the only way that someone pays taxes in the US is when the income is sourced in the United States. Therefore, foreign individuals coming to the United States, opening a company in Delaware, and the sources of their income is not in the United States, but they are foreign, they will pay no tax when the company is one single individual. Now, things change when the company is two or more individuals. When the company is two or more individuals, even though the sources of the income are foreign, they have to pay taxes in the United States because it's two or more people. That's a main difference in terms of taxation. This only works when there are no assets in the United States. There is no assets producing income in the USA. There is no sources of income in the USA. And the company is owned by one single individual.
Okay.
If that single individual starts selling something in the US and he or she has clients in the United States, he has to pay taxes for those sales, for the profit that he makes on those sales.
Okay.
The rule does not apply if there is activity in the USA for single owners. And the rule does not apply if the company has two or more owners. That is perhaps one of the benefits of having a company in these states, in Delaware, that they do not, Delaware, Wyoming, Nevada, that these states do not tax profits of companies. And because the LLC, the limited liability company, is owned by a foreign individual, at the federal level, there is no tax either because there is no income source in the United States. And remember, things change. If you have assets in the US, if you have a house and you rent out the house and they produce income, then you have to pay taxes for that income, even though you are not living in the US and you are a foreign citizen. So things change. The key of this state or the reason why this work is the non-existence of income or sources of income in the USA.